Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the market is open and yes, the market is not behaving like a typical Monday market. If you look at a chart of US dollar index DXY, then you'll see that more or less DXY is behaving like a Monday market. There is not much volatility. But in the last few days, we have seen that the correlation between DXY and gold is not going pretty well. It's like that they just had a recent breakup, okay, and we can see that gold is flying solo right now. Gold closed at 1923 and right after the market opening we can see that gold is bullish. You can see gold is right now standing at the previous high of 1929, which is also a resistance for the market. And the reason is there is a big fall on the chart of US government bonds, and you can see that there's a pressure on the chart of bond and we can see the impact on the chart of gold. So if the fall continues, high chance is that the rise on gold will be seen. Gold will show further upside. So the next move on the chart of US government bonds will be important. Gold edges higher ahead of Fed meeting this week. Gold edges higher in early Asian trade ahead of the Federal Reserve September policy decision on Wednesday. The meeting will be a big event for the precious metal as the Fed will not only announce its latest interest rate decision but also release new economic forecast. So this FOMC on Wednesday will be very important. So till then we can expect that gold may show some upside, but gold should not take a particular direction. Gold should not fly and gold should not break 1950 at least, because usually before a big event like CPI, NFP or FOMC we get to see a sideways market, choppy market, where the levels usually work, the reversal trades usually work. So let's wait and watch. So let's talk about the chart of gold then. So usually we get to see a silent market. Usually the market sleeps on Monday, especially during the first half, but today market is volatile. And if you guys are looking for detailed analysis, please watch the video that I uploaded on Saturday, because I do not want to repeat the same stuff and bore you guys. So you can see here we also discussed that if market goes up and the volatility of the market is not very high, then we can expect the market to reverse from here and we can look for a sell. But we can see that since the opening of the market is volatile. Though we can see the market is struggling right now, but the market was quite bullish. So if you guys already you have taken a sell position, then yes, you can be on the trade, because still there is a good possibility of a downside from here. But if you are looking for fresh position, then I'll say that wait for some time, because still we do not have the confirmation yet. Confirmation is extremely important. Let's wait till the European session. If by the European session if you see market is going down, then you can look for a sell. Okay, and to be on a safer side, you can follow my strategy of 40 pips. Okay, but if you already have taken a sell, okay, you can put your stop loss somewhere around here, because around 1933.50 we have the FIBO 61.8% retracement level. So a stop loss above FIBO 61.8% retracement level will be a safer level. Okay, and because in my previous video also we discussed about this, that the next resistance on the chart of gold will be around 1934 to 1936. 1936 seems to be a legit level and looks to be a strong level because of FIBO 61.8% retracement level, and we also have previous support or price rejection around the area. So we can expect that previous support will work as resistance. Okay, and in addition to that, okay, we can also expect that the FIBO 61.8% retracement level will also create some trouble. So if market reverses, we can definitely look for a sell position. But this is our second resistance. Keep in mind, this is our second resistance and this is our first resistance. the level where market is standing right now. So observe the market here first. If market breaks the level, okay, if market breaks 1931, and if you see the market is very bullish, you can look for a buy position, quick buy position of 25-30 pips if you want to take the risk. If you have the risk appetite, if you can afford to take the risk, then you can go for a buy if you see the market is going up, forming a big green candle, okay, and you can exit around 1934 level. But if you don't want to take the risk, okay, then you can simply wait for the European session, let the market reverse, and if market reverses, if you see the market forms a red candle, already we can see price rejection, but the market is volatile. US government bond is going down, so wait for some time. If market reverses, we can go for a sell, but if it breaks the resistance, then and you want to be on a safer side, then you can look for a sell around 1934-35 level, okay. And in this scenario, I don't think so that gold have the strength right now to break 1934-35 level, but keep in mind, no level is permanent in the market, we can just expect. So as a result, please follow proper risk management, okay, because market is full of surprises and we cannot deny it. And this is the main reason 100% guarantee is not possible in the market. And those guys who claim 100% accuracy on Telegram, you need to stay away from them, okay, because those are fakes. So observe the market around these two areas. If market reverses, you can go for a sell, and if you see the market is going down, the levels that I mentioned on Saturday are still very much valid. We have support around 1919 level, okay, we have support around 1919 level, because we have FIBO 38.2% retracement level, and in addition to that, the previous resistance will be working as support. Again, we have the support around 1915 to 1916 because of previous support, as well as FIBO 50% retracement level. So the support levels that we discussed on Saturday are still very much valid. But again, okay, we have a new support coming up here, and the level is around 1922, around 1922 to 1922.50. As market, you can see here, as market has bounced from here, and by the European session, if market comes down, then buyers, you can look for some buy around this area. And the sentiment on the market is positive right now. You can see that gold is bullish. So what is the sentiment here? Market sentiment is bullish. So whenever the market sentiment is bullish, buy at retracement is always the best thing to do here. So taking a sell, yes, if the level is good, taking a quick sell, yes, it gives us the adrenaline rush, okay, but buy at support when the market is an uptrend is always the safe strategy or safe thing to do. So we can also observe the market around 1922, 1922.50. If market takes support and bounces, we can go for a buy. But 1919, 1915 to 1916 seems to be a better level to place a trade. So let's wait and watch how the market reacts. The morning volatility was unexpected. So yes, market may give us some surprises. Please follow proper risk management. Do your own analysis. Do not gamble with your capital and hard-earned money. Bye-bye. Take care. See you tomorrow.